Hi. Welcome back to another episode of Stock Market Learning Series. Today, we have covered the complete details about IPO. First, let's check what is IPO. When the company is offering the shares for the first time to the public, it is called as the initial public offer, or IPO. Why do companies go public? 1. Raise capital. Raising capital helps the company to grow, innovate, expand, and take risks, because IPOs can provide them financial cushion. 2. Provide an exit for early investors. Any existing shareholder of the company could be promoters, angel investors, venture capitalists, can use this opportunity to sell their shares in the open market. 3. Reward to employees through employee stock option. In some companies, shares are allotted at a discount to the employees. Once the company goes public, the employees stand a chance to see capital appreciation in the shares. Let's learn few key IPO jargons. Undersubscription. Let's say the company wants to offer 100,000 shares to the public, but only 90,000 bids were received. Then the issue is said to be undersubscribed. This is not a great situation to be in, as it indicates negative public sentiment. Oversubscription. If there are 200,000 bids for 100,000 shares on offer, then the issue is said to be oversubscribed 2 times. This indicates positive public sentiment. 3. Price band and cutoff price. Price band is a price range between which the stock gets listed. For example, if the price band is between 59 rupees and 60 rupees, then the issue can list within the range. Let's say it gets listed at 60 rupees, then 60 is called the cutoff price. How to apply for IPO? You get notified through an email when a new IPO is open for subscription. Email will include all the necessary details, like price band, lot size, issue date, issue size, etc. Do your research and learn about the company before applying through the link provided in the email. Recent IPOs in India. Macrotech Developers Limited, Barbecue Nation, Hospitality Limited, Kalyan Jewelers India Limited, and the list goes on. You can view the complete list in the description section. What is Draft Red Herring Prospectus? DRHP contains complete details about the company. If you are interested to invest in IPO, then you should read through the DRHP to know everything about the company. How to find DRHP document of a company? You can download DRHP document of any company from the SEBI website. In the filling section, search with company name and click on download. What happens after the IPO? The moment the stock gets listed and debuts on the stock exchange, the stock starts to trade publicly. This is called the secondary market. The stock gets traded daily on the stock exchange. People can buy and sell stocks regularly. Key takeaways from this chapter. 1. Companies go public to raise funds, provide an exit for early investors, reward employees, and gain visibility. 2. Merchant banker acts as a key partner with the company during the IPO process. 3. SEBI regulates the IPO market and has the final word on whether a company can go public or not. 4. As an investor in the IPO, you should read through the DRHP to know everything about the company. In the upcoming video, we will cover the topics: different types of traders in the market, and how to calculate returns. Follow us in Facebook and subscribe to our YouTube channel. Thank you for watching.